And here is ARK. This analysis was requested by Nabes, who was curious as to what I thought about ARK from a technical analysis point of view. So here it is. I had done this a little while back, and I just got rid of all the markings, so we have a very clean slate, which is good to have. So this clearly was a pump and dump. Something happened here. The founders, the whales, I don't know what you want to call them, who got in, the YouTube personality who got paid for shilling for it, they dumped it. And they were bag holders here. You know, I truly believe when people treat other people like this, what goes around comes around. It does. When those YouTube personalities took money knowing this is going to probably happen, but still shilled for them. And we know who they are. We know who they are. You probably know who they are. It was hard to miss them. What goes around comes around. Anyways. So, what does all of this mean? What can we glean from any and all of this? Let's see. Let's go look at pattern first. So I'm just going to draw some lines. Draw a line here. And then I'm going to draw a line across it, across the bottoms of the price bars, one across the tops. So what do you call this? If I had a flagpole looking like this is like a flag, this thing, and it's pointing downward. When a flag pattern or a triangle, sometimes this is a rectangular pattern, two parallel lines. Either way, when they are pointing downward, it's a bullish indication. This is just purely a consolidation, temporary. That's all it means. So I find that pretty exciting. This is the logarithmic chart. Interesting. Okay, anyways, let's stay here. So if this is a consolidation, most likely prices will break out of this because this is bullish. Prices have to break out of this white resistance line. So let's do some counts then. Elliott wave counts. This is why I like to combine Elliott waves and chart patterns. Okay. So here it is. Earlier you saw me probably kind of hesitating and going back a little bit because I was trying to figure out how to assimilate this into the count. And what I decided to do was instead of making this 1, 2, then this 4 will violate. So there are certain rules in Elliott wave counting. Wave 1 and 2, the bottom of 2 cannot equal the beginning of 1. cannot exceed it either. So in this case, it meets the rules. If I put 1 and 2 here, it would have still met the rule. 1 and 2. But then if I place 3 and 4, the bottom of 4 cannot overlap with the top of 1. And that's exactly what he was doing here, which is why I kind of stopped myself and went back a little bit. So 1, 2, 3, 4, the bottom of 4 no longer overlaps with the peak of 1. So check on that. 3 cannot be the shortest. By far, in price height, that is, from beginning of the price to the end of the price, not in time. And in this case, 3 is not the shortest at all. Look how short 1 is, look how short 2 is, barely any height in price. I also like the fact that here's 2 is very long and complicated. 4 is very sharp and quick. The rule of alternation between wave 2 and wave 4 has also been met. However, that is usually about 63% of the time. For equities, now I'm trying to get my bearing as to what percentage of alternation occurs between waves 2 and 4 for cryptos. I'm collecting data. For equities, is 63%. I have a feeling that it's less than that for cryptos, the rule of alternation. But we'll see. So we just covered rule of alternation. Wave 5 just has to have 5 subwaves. Now wave 1 must have 5 subwaves. Wave 3 must have 5 subwaves. Wave 5 has 5 subwaves. Wave 2 and 3 and 4 rather. Wave 2 and 4 are ABCs, 3-wave retracements. Every 5 wave, 1, 2, 3, 4, 5 subwaves of 1 must be retraced, which is why you have wave 2. Every 5 waves, even now, the subwaves of wave 3 must be retraced. The 5 subwaves of wave 5 must be retraced too. But when you get to 5 here, you have to go step back a little bit and say, okay, we now have 1, 2, 3, 4, 5. These 5 waves, not the subwave, not the sub 5 waves, but these 5 waves must be retraced. And that's exactly what it's doing here. It's retracing as an ABC, beautifully. Textbook, crisp, clear retrace. And again, another indication of, let me just bring this over here, crypto-like feature of a correction. In other words, A is longer than C. I am seeing this a lot more often. Usually in equities, you have ABC looking like this, like a lightning, where the C is the longest, almost always. But in cryptos, I'm seeing it like that more often than not. So clearly, from a wave attribute point of view, there are certain differences between equities and cryptos. The first thing I noticed in cryptos was extended fifths. That the fifth wave was quite often the longest wave instead of the third wave. Okay? In equities, you get 5 waves like this. 1, 2, 3, 4, 5. 3 is extended in stocks. However, in cryptos, I'm seeing this quite often on a daily count. 1, 2, 3, 4, 5 is extended. It missed the rule still. 3 is not the shortest. It never said 3 has to be the longest. So I say this is very interesting. When you get to know somebody, you feel, you identify the nuances. I'm getting to know the cryptos since I've been counting these now for a little while. I'm getting to know them on a personal basis, if you will. There are certain unique differences. Now in commodities, you see this as well. In commodity, you see more, not as frequently as cryptos, but just like cryptos, you see extended fifths in commodities, whether it be cotton, sugar, oil, gold. In precious metals, I haven't seen it that much actually. In derivatives, I've seen it. In options, in the calls and puts, I've seen it. And I think the reason why you see extended fifths is because you don't have the PPT messing around in the cryptos. You don't have the PPT messing around in the options market, except in the index options that they buy to goose the market. They rarely buy put options, I'll say that. They almost always buy call options on the index as soon as they feel the market's tanking to goose it back up. But they don't do that in commodities. They never buy options in commodities. So it's almost natural, more natural, organic, let's say. That's a good way. Very good terminology for this. Cryptos are more organic than equities. They are less messed with by the government, by the central banks, by the plunge protection team created by Ronald Reagan. I remember that 1987, yes, that Monday morning crash or so. And after that, he created the PPT. Now, ever since then, they've been goosing the market every chance they can get. Still, it's illegal for them to buy outright stocks. So, if they cannot buy stocks, they'll buy the index options, the Dow, S&P, Russell, the options to the index. The sneakiness of humans have no bounds. Amazing. Anyways, let's take a look at this. So we have 1, 2, 3, 4 extended fifth. We have an ABC where A is longer than the C. Perfectly fine. So these 5 waves become subwaves themselves. This is wave 1. And its subwaves are 1, 2, 3, 4, 5. This is wave 2. And its subwaves are this ABC. What does that leave? This is a phenomenal opportunity, I think. That means 3 is coming up with 4, 5. I can't. I'm going to readjust this, sorry. Couldn't move the screen without it. I mean, this is, screw the guys who did this. Their name is Mud anyway. So anyways, this is phenomenal opportunity. We have, I need to change the degree. That's minute. This is a daily, so I need to make the intermediate. I need to make these minor. That into minor as well. Okay. All right, so we have change the color to differentiate. I'm now trying to see if I can coordinate it with the Bitcoin's wave 5 or 5Ys possibly, but we'll see. So if this is 1's done, 2 is done, then 3 is next. And in this case, I've made 3 the extended one for now. Could be that 3 will be here, 4, 3, 4, and then 5 could be the extended. We'll see. We shall see. Now let's delve a little further in to the hourlies, because I wanted to show something that I thought I saw. All right. So if I had to draw a neckline here, here's a left shoulder, head, right shoulder. This could be the bottoming event that'll allow prices to come out of it. Key here right now is for prices to come out of this, breach this resistance line. So if this is about to happen and we are on the terminal end of C, the best time to buy into this is at the terminal end of a C. When you see an ABC correction in progress, you want to kind of calculate and measure the end of the C, because that's when you want to do your ladders. So you can do a ladder right here for your entry, buy one there. I'm going to call it by a unit, whatever that unit might stand for you. For big Bill Gates, a unit might be 100,000 coins. For a teenage kid into Bitcoins, a unit might be a coin. It doesn't matter. You still ladder in. I can ladder in right at the bottom here. I could do another unit. I like the apex. I'm going to go close to the apex right here. Set one unit by one there. And in case it shoots down, it gets really close to the apex, I'm going to put one on the apex right there. I'll cut this in half. I got 3, 4, 5. 5 rungs. Put one up here. 6 rungs. 7 rungs. Okay. Cut this in half. Put more on terms of in the middle or right there. Now I have 8 rungs. So this is my buying region. Because I don't know, it might turn from here, then I get at least 2 rungs filled. If I keep grinding down and kiss the apex, then I've got a lot more rungs filled. And I'll be overcome with joy to see that price is coming down and I'm getting better priced fills of my lower rungs by rungs. This technique, I don't know of any other technique that can best this technique. To de-risk you from, let's say I bought everything all at once right here at the current price. And if price starts going down, I'm going to have some emotional issues, pain, buyer's remorse. You can get rid of all of that nonsense by laddering in your entries. And most likely not all of these ladders will be filled. That's good. You want to design it in a way so that it doesn't get all filled. It'll be very unlikely, let's say. Why is that good? If I have all the rungs filled except this one, unfilled, I have 2 rungs unfilled and I've got 2, 4, 6 filled. Let's say price goes like this. Okay. Then the fact that I have 2 rungs still remaining unfilled, quote unquote, forces me to have a certain percentage of funds in cash, that I am not 100% invested, that I am not fully invested into cryptos, that I always maintain cash a certain level. So I think that's a cool feature to have. It saves my bacon more often than not. But you sleep better too. At night, like tonight, I think I might do this. I might cast this. Okay. Set it up. Go to bed. See what happens. In the morning, quite often when I do this, I find 1 or 2 or 3 or 4 rungs filled. So, what do I think of ARK? I think this has got some great potential. Given that 1 is done, 2 is just about finishing. And after 2 nearly a wave means 3 up. Giddy it up. I hope this has been helpful. I try to be as clear as possible, and I think I am helping. I see a lot of good comments coming out to that effect. So I hope I have earned the right to ask you to consider an upvote, follow, and a re-steam, and share it with others who you think might have interest as well. Thanks and have a good night.